Welcome to this week's edition of the Regtech Africa News Roundup. And here are the top headlines for the week.
CBN and FG agency to review new regulation on bank customer data. Banking fraud in Nigeria soars to 9.5 billion naira, projected to hit 20 billion naira by year end. NICOM encourages tech adoption to boost insurance penetration. 54 African nations convene in Nigeria for Africa Internet Governance Forum. Kenyan Blockchain Association challenges digital asset tax in court. Ghana's Letsaho receives Bank of Ghana approval for 200 million cedis bond issuance. And the Financial Conduct Authority identifies shortcomings in firm sanctions controls. Now the news in detail. The National Commission of the Nigeria Data Protection Commission (NDPC), Vincent Olatuji, has revealed that the Commission has established a joint committee with the Central Bank of Nigeria (CBN) to review regulations requiring financial institutions to collect customer data, including social media handles. In June of this year, the CBN issued regulations mandating financial institutions to collect various customer details, including social media handles, as part of its new customer due diligence requirement. However, the NDPC had opposed these regulations, deeming them unnecessary. The Nigerian banking system has been grappling with staggering losses to fraud, with over 9 billion naira already lost this year. Experts have predicted that this figure could skyrocket to a staggering 20 billion naira by the close of 2023, underscoring the urgent need for financial industry players to enhance collaboration in combating the escalating rate of fraud in the nation. The Director of Payment Systems Management at the Central Bank of Nigeria (CBN) and the Chair of the Board of Nigeria Electronic Fraud Forum, Musa Jimoh, stressed the necessity for improved cooperation within the payment system ecosystem to counter the surge in electronic fraud. The National Insurance Commission NICOM Akwa Ibom chapter has issued a call to insurance industry stakeholders, urging them to harness technological advancement in extending insurance products and services to a wider Nigerian audience, thus driving greater insurance penetration. The body made a call at a recent media retreat organized for insurance and pension journalists in Uyo, noting that insurance penetration is a metric that measures the contribution of insurance to the gross domestic product (GDP). The federal government, through the Nigerian Communications Commission (NCC), would host the 12th edition of the Africa Internet Governance Forum, AFRGF 2023 in Abuja. Delegates from 54 African nations and other continental stakeholders are to foster dialogue and discuss on internet governance centered around transforming Africa's digital landscape, empowering inclusion, security, and innovation. Let's go for a short break, and when we come back, the news continues.
Do you want to develop strong foundation in regulatory fundamentals and the role of technology to achieve set organizational strategic plans? Sign up for the Regulatory Technology for Governance, Risk and Compliance training with AGRC in London and elevate your expertise.
Now in African news, the Blockchain Association of Kenya, BAC, is taking legal action to halt the implementation of the Digital Asset Tax, DAT, which was introduced a few months ago through the Finance Act 2023. The case is scheduled for court mention on September 28. The newly imposed tax, effective as of September 1, is one of the several taxes introduced in the Finance Act 2023 aimed at expanding taxation within the digital space. Letsaho Ghana has received approval from the Bank of Ghana (BOG) for the issuance of 200 million cedis in corporate bonds, according to Puelo Mapaya, the company's chief financial officer. The move is part of Letsaho's efforts to extend microcredit services to individuals and businesses in Ghana. The company has already disbursed 13.6 billion cedis to 5.6 million customers with an average of 194,000 daily transactions. Now in world news, a recent survey conducted by the Financial Conduct Authority (FCA), examining sanctions controls at 90 UK firms, has reviewed a range of deficiencies across crucial areas such as staffing, technology, and reporting frameworks. The regulator's findings indicate that some firms still lack adequate resources to ensure effective sanction screening. And that's it on this week's Africa News Roundup. Join us again next week for more updates.